This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil edged higher in volatile trade on Friday, and was flat on the week, with prices supported by the prospect of lower Russian exports but pressured by rising inventories in the United States and concerns over global economic activity. Brent crude futures settled at $83.16 a barrel, up 95 cents, or 1.2%. West Texas Intermediate U.S. crude futures, WTI, settled at $76.32 a barrel, rising 93 cents, or 1.2%. Earlier, both fell by more than $1 a barrel. The benchmarks were little changed on the week. Lower trading volumes contributed to volatility, with Brent trading at 58% and WTI trading at 90% of the previous session's levels.
Asian spot liquefied natural gas, LNG, prices eased this week, extending declines to its lowest since July 2021, as demand from key buyers in Northeast Asia remain weak. The average LNG price for April delivery into Northeast Asia LNG was at $15 per million British thermal units, MMBTU, industry sources estimated, down $1, or 6.3%, from the previous week. Asia's spot LNG prices have been trending downward since mid-December, and have lost 46% since the start of the year. Asian LNG prices have indeed been fairly flat with a slight downtrend this week, returning to a discount against the TTF, said Rihanna Rassidi, gas and LNG analyst at data and analytics firm Kepler, referring to Europe's gas price at the Dutch TTF hub.
Moving on to the top news in the energy sector.
U.S. energy firms in February cut the most oil and natural gas rigs in a month since June 2020, with the gas rig count falling to the lowest since April. Energy services firm Baker Hughes County said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, fell 7 to 753 in the week to February 24. Despite this week's rig decline, Baker Hughes said the total count was still up 103 rigs, or 15.8%, over this time last year. U.S. oil rigs fell 7 to 600 this week, while gas rigs were unchanged at 151.
U.S. power plant emissions of pollutants that harm human health and warm the planet fell last year as the industry continued a switch from coal to natural gas, the Environmental Protection Agency said on Friday. The reductions occurred, despite a 2% rise last year in electricity demand in the lower 48 U.S. states, mostly due to the transition off coal, the fossil fuel that releases large amounts of pollution when burned. The EPA said emissions of smog components nitrogen oxide and sulfur dioxide last year dropped 4% and 10%, respectively, compared with 2021. Emissions of mercury, a neurotoxin which can accumulate in the environment and make some kinds of fish unsafe to eat frequently, fell 3%.
Next, we have the top news in metal markets.
Aluminium prices on the London Metal Exchange shrugged off a decision by the United States to impose steep tariffs on Russian metal on Friday, though traders said prices would have jumped if the US had imposed sanctions instead. 1 year on from Russia's invasion of Ukraine, the United States said it would impose a 200% tariff on aluminium produced in Russia from March 10, effectively a ban on Russian aluminium imports to the country. Benchmark aluminium on the London Metal Exchange, LME, was down 2.2% at $2,342 a ton at 17:30 GMT after touching $2,321.50, its lowest since January 9.
Gold prices dropped to their lowest in 8 weeks on Friday, pushed down by a stronger dollar and bond yields as the market braced for more interest rate hikes by the U.S. Federal Reserve in the coming months. U.S. inflation accelerated while consumer spending rebounded sharply by 1.8% in January, reinforcing expectations that the Fed will remain hawkish. Spot gold fell 0.6% to $1,810.89 per ounce by 2:29 p.m. Eastern Time, 19:29 GMT, having touched its lowest since December 30, at $1,808.70. U.S. gold futures slipped 0.5% to settle at $1,817.70. We will now look at the top news in the agricultural. Euronext wheat fell to a new one-month low on Friday, pressured by export competition from Russia and expectations that a wartime shipping corridor from Ukraine will continue. An absence of fresh military escalation in Ukraine on the first anniversary of Russia's invasion also encouraged prices to ease, traders said. Chicago wheat also hit a one-month low, with the U.S. market facing additional pressure from a strong dollar. May wheat, the most active contract on Paris-based Euronext, settled down 1.3% at €280.00, $295.60 a ton.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.